So the market opened higher, and then it was still a little bit guarded as some data came in. Actually, the data this morning was better than expected. Of course, there's a sense that the Fed policy is changing, and it's ever changing. Here's the thing, the revolt at the Federal Reserve, it's in full effect, folks. And what's really interesting about it is that the dubs have been laying it on thick. Of course, yesterday, that's what sent the market lower. But today, the de facto chairman of the Fed, James Bullard, taking the middle ground, right? Sort of saying that a soft landing is still possible. Now, sans his Fed drama, the market clearly wants to move higher. Earnings misses have been rewarded. Folks on the sidelines have the beginning of somewhat antsy now because I'm telling you, a surprise move, particularly on Friday, and you could be missing out on huge money. Here now to discuss is Compound Capital Management President Gary Kaltbaum, along with Market Gauge Managing Director Michelle Snyder. Michelle, I want to start with you and get your take on these earnings. Results have been better than expected, but I think it's the reaction to earnings that's really amazing to me. Companies that miss are seeing their stocks go up, and companies that beat are seeing their stocks go even higher.
Well, yeah, I'd say a better expression than better than expected is better than feared. And I think that's really what the environment has been right now. So the stocks that have actually earned better than what they had expected are falling because they're saying where they're going to go. And the ones that had had done better than what was feared have done better. I know that sounds like a lot of betters, but what I'm really trying to say is this. Sorry, a little tongue-tied here. Is that essentially we're having the reverse effect, is that anything that's done too well, they're assuming is not going to do as well going forward. Things that have done as well but not as bad as they thought are doing better. That's where we're at. And I like to use Apple as really a great example because it's a barometer, right? Especially for the tech.
Right.
So it had that gap. For a technical person, this is great because now you know that could it go up to the highs? Maybe. But if it fails that gap low post earnings, that's the time to get out. And that's kind of going to be the case for a lot of these stocks that have gapped higher on these earnings.
Speaking of gapping higher, Gary, I like the fact that asset managers and leverage funds are net short this market. Think about that for a moment. I mean, if we really take off, they've got to play catch up. We're talking about the ultimate short squeeze possibly.
Well, look, too many shorts having to cover always will help the market. A lot of cash having to buy into the market will always help the market. But there's nothing better than watching the market. And week of July 18th, I told you I thought a broad-based low was being put in. I wasn't sure. You always wait to see what happens, but it looks like it is happening. And the great news is it's being led by technology again, which always leads up and leads down. I don't know how long it lasts, how far it goes. I will tell you the earnings stink. My favorite one was Uber reports huge loss, but beats the estimates, up 12% pre-market. But you're in a little bit of a sweet spot here, and bad news is good news. Good news is better, and that really defines a bullish trend. It's just a matter how far. And for every viewer out there, you must know that if you go back to 2000 to 03, if you go to 08, 09, and past bear markets before that, you do get some really good bear market rallies that you think everything's A-okay, and then a few weeks later, good night. So we're in there buying. We bought a couple of weeks ago. We started. We're moving in more. Right. But I will tell you, we believe they're rentals, and hopefully we can keep them for 10 years. That would be real good. That means we bought the lows.
All right. And here's the thing, Michelle. I know you pride yourself on being in before the crowd. So are you kind of happy that there's still this much pessimism out there?
Well, in a sense, yes. Last time I was on the show, we told you that our quant models actually had bought all the indices through the 50-day moving average. And what you don't see in these big institutional investors is doing that sort of thing where they go from a bear phase to what we call a recuperation. They want to go from bear to bull. That's why they're often late to the party, and people like us get in right on time. So yeah, the thing is, to just pick up on Gary, I also look at more of a rental. We actually took some profits on those quant models today in NASDAQ, up 7.5%.
So let me jump in here for a second, Michelle, because you're going right where I want to go, and that's leadership. If we take the top 10 stocks in the S&P 500, they're right now 29% of overall market cap, but their earnings have come down hard. They're only 20% of earnings. So should investors who are looking at this, particularly maybe for rentals, but even longer term, be looking for new leadership?
Well, that's a great question, right? So if you look at the difference on the PEs from the top 10 to the PEs on all of the smaller cap stocks, there's a huge divergence. But it's really going to really depend, I think, on inflation and what happens with inflation. So these big cap companies do great. They have tons of money. They're the kings. It's where all the money goes. Anything cloud-based started outperforming in the pandemic, and now we're seeing it again. But if we actually can, and I'm skeptical about that, get inflation under somewhat of control,
right.
Then you have all these other smaller cap stocks that are ready to fly because they've been really beaten down on their PEs versus the top 10.
And I think the operative word there is fly. I'm telling you, these stocks are moving fast, real fast. You know, Gary, I know you're not a fan of the Fed and you know, and the sort of power that they have, but let's face it, yesterday they beat the market into submission. And at the same token, they're talking about a soft landing. And then you hear this morning, Jeffries agrees that this Fed can engineer a soft landing. Are you buying into that?
I don't. I think they're nothing at this point in time. They've been playing catch up. I'm watching markets. The reason why the market's up is oil prices have come down, commodity prices have come down, and yields have come down. If that changes, I will promise you the market will change. I don't think they have any control at this juncture. They sure do have big mouths, but I think they have much less control than when they were printing trillions of dollars. And again, I'm just watching price action's really darn good. And when I see technology in the lead, I'm a happy guy, and I hope it lasts for a couple of years. I'm doubtful of that, but hey, every day that it goes up is a good day.
Michelle, I got 30 seconds. You talked about, like Gary, renting. What turns you from a renter to a long-term buyer? Like you really feel comfortable?
Well, we really still like the biotech space because it just sort of goes flatline against the growth stocks, but it made a big move today, and some of those earnings came in really great. So we're in, believe it or not, Clover Health reports next week, Vertex as one area. Yeah. We also like the EV and the solar space, but not right here. I would like to see a dip. They ran way too rich. Companies like Ford and Tesla, for example. And I still would not forget about commodities. Natural gas, by the way, as we were talking, it just went flying, which also brought up the silver, which also brought up the gold. So I think you have to really be inflation aware.
Yeah.
And I just want to say one other thing to Gary's point. I know I don't have much time, but the yields can fall to a point. But if the yields fall and the TLTs outperform the SPY, that's also a warning, and that's a great sign that the Fed has indeed lost control.
I think investors have learned that the hard way, right? They can go up too much and down too much, and it gets so damn confusing. You're like, what the heck? Gary, Michelle.
It's called vertigo.
It's called vertigo. Thank you both very much.